right, folks, welcome back. Ryan Faluna here with the Benzinga Pro Team, and today I want to talk about something trading strategy related. I want to talk about trading strategies based on price action, and I want to give you 3 simple things that you can look for and fold into your active trading starting right now. All right, we're actually going to focus on the stock Affirmed here. And we're going to go through some of these 3 things. So first of all, I just want to start it off. The 3 things that we are going to focus on here today: the behavior of the price around support and resistance lines. We're also going to focus on wicks, both above and below, and I'll show you and define those wicks here as well. And then, of course, as we do with pretty much anything involving day trading, we're going to focus on the volume. So again, behavior of price action around support and resistance, wicks, both above and below, and volume are going to be the 3 things we're going to incorporate into this plan. Now, one of the other things that you're going to need is something to help you have or find targets to trade. What I'm using here is Benzinga Pro. I think all of you folks should use it, obviously. And more specifically, I'm identifying stocks that are in play based on the scanner tool. And the crux of this scan centers around intraday relative volume. So the thought here is that we want to find stocks that are trading on higher than average volume, and then we want to observe the price action and then trade them for profit based on that price action. So the scanner is constantly running here. It's identifying a bunch of different tickers of a bunch of different prices, but the example that we're going to focus on here is Affirm. So what I'm going to do is I'm actually going to change over now to a chart only so that it's easier to see. So once we've identified a stock off of the scanner or any other tool that you're using to find it, we're then going to go ahead and chart it. Now, let's start here with Affirmed. So the first thing that we need to do is we want to identify support and resistance levels. Now, what you'll see here, I have a daily chart. You'll see a bunch of different moving average lines, and then this purple rectangle that goes all the way back to 2021. Let me explain what we're looking at here. First of all, the moving averages, these are simple moving averages. They're the 50, the 100, the 200, and the 500, and the 20. And you can absolutely identify support and resistance levels based off of these moving averages. So on this daily chart, for example, with the price up here at $76 for AFRM, I would say that this yellow line that you see here is the 50-day moving average. And this value, this 63.71, this value is now support. Notice that prior to today, as this stock traded up towards this area here, it was actually met with resistance, because this was a resistance level that has now become support. And resistance and support levels are going to be related in that way. A lot of the times, a previous resistance level that ends up getting taken out, especially if it gets back tested, now becomes a support level, and vice versa. And that's what we're seeing here on Affirm. All right, so this is how you can identify these levels from some of these moving averages. Just to carry that example forward here, the purple line would also be a support level. The light blue or teal line here at 55.25 would also be a support level. And the dark blue line down here at 43.36 would also be a support level. The purple line down at 31.67 would mark the last one that we have from these moving averages. But moving averages are not the only way that we can determine support and resistance levels. The other way that we can determine that is previous price action. We can look at what the stock did price action wise at some point in the past, identify different levels where things changed, and then carry that forward. And that's exactly what we've done here with this purple rectangle. You can see that we had, going back to 2021, this is the spring of 2021, we had a pretty decent range here, right? Really from the end of March until we broke out of this here at the end of August, we pretty much traded between this range here of about 55 to 80. Okay, so 25-point range there. We pretty much traded around in it. It went up to the top end of the range. It went to the bottom end of the range. It actually broke that range temporarily and quickly recaptured it, and then it stayed in that range again. And then it really made a big move on a catalyst, right? It moved out of that range. It continued to run, in this case, all the way up to like 170 something and change. Then it came all the way back in. You notice when it dropped into that range, it actually carved out the range when it went in there. And then when it dropped out of that range, you'll notice that the bottom end of that acted as resistance when we tried to get back into that range. And then finally, when we went back into that range, we actually back tested the bottom of that range and then traded up towards the top of that range, rolled back over, and used this area as support again. So we're basically just identifying these areas by looking at the chart and seeing where the stock had trouble trading up or trading down, or where it reversed. Okay, and you can do that on any time frame. Speaking of that, we're actually going to zoom in and look at a smaller time frame here on a firm. I'm actually going to go ahead and just to make this a little bit easier to see, let me go back here and I'm going to hide this real quick. Let's go ahead and hide that drawing. Okay, then we're going to remove that purple box, but we identified some of those levels. They were 55 and 80. Now let's look inward at Affirmed. Okay, here we go. First of all, just know what you're looking at. The blue shaded area represents the after hours session yesterday. The gold shaded area represents the pre-market session here today. And you can see that this stock pop, thanks to Benzinga Pro here, we can tell that Affirmed shares are trading higher following better than expected Q2 financial results and strong fiscal year 25 guidance. Okay, so now what we want to do is we want to identify some support and resistance levels based on the price action from some of these smaller time frames. So what I'm going to do is I'm going to select my drawing tool here and I'm going to click on horizontal ray. First, I see this impulse move right up here. We're going to go about to the top of the candle and we're going to click. You can see, look at that. That created another resistance level. How about that? Then we're going to do the same thing up here at the top. That looks to be a resistance level as well. If we look in here, you can see, yeah, this is kind of a resistance level and maybe the stock will sell off. We should always have a plan for levels above and below where the price is, because even if we have the best drawings out there, we're never really sure what's going to happen in the future, and we should be prepared for both outcomes. So what I'm going to do here now is I'm going to go ahead and draw this line. We're going to go ahead and make it, just eyeball it here. Perfect. Okay, so now we've identified some support and resistance levels from a smaller time frame chart. Now, so that is the first thing, right? The behavior of the price around those support and resistance levels. What do I mean by that? Well, look at this stock traded right up to the 76.83 area, and it reversed. And it reversed pretty hard and came all the way back down to this 70.92 or 71-ish area that we had identified where the stock had reversed before. And look what happened. It found some support there. I can actually clean this up a little bit too by removing some of these moving averages that we no longer need. Okay. So here we go. We have some levels identified here, and we can tell that the behavior of the price action is changing around some of these levels. So we want to note those levels, and if we see the price action come in there again, we'll know how that behaved in the past. Now, you don't just need to use a 1-minute chart. In fact, I encourage everyone out there to practice using multiple time frames of charts. Daily, weekly, monthly, 1 minute, 5 minute, 15 minute would be the 6 that I would recommend that you can start. But really, there's no right or wrong answer here. If you're comfortable with multiple time frames, use those. That would be fine. I'm just trying to provide a guide here. The next thing, the second thing that we wanted to talk about are wicks. What are wicks? Well, what we're using here is what's called a candlestick chart, and each one of these candles here represents the time division that we have here. So we have a 5-minute chart, so each candle represents a 5-minute period. Now the top, the candle has two parts. The thicker part here is called the body, and the thin part here is called the wick. And we borrow these names from a candle, right? A candle wick is that really thin part at the top that you light. In stocks, though, wicks can actually form on the bottom of the candle as well. And if we look at AFRM here on the 5-minute chart, you can see we have this candle right here, the candle here at 9:40 Eastern. This candle produced a wick to the upside. And this tells us something, right? This tells us that this might be a reversal candle. Well, when we let this play out, indeed, this candle did reverse the price. So we traded up to 76.83. We put in this candle here, which has a very, very small body and a long extended wick to the upside. Generally speaking, that signifies a reversal. Now, we get the same type of action at the bottom down here, or at the bottom down here at about this $71 level. Now, it's a little bit different. Unlike this first candle that we looked at, it's not one long wick on the candle. It's actually two candles that produce very similar wicks consecutively. And this is another key takeaway. Just because you have one candle that produces a wick, unless that wick is exaggerated, like we saw here to the upside, the reality is that multiple candles can also help form this. And that's what we see down here in the 10 a.m. to 10:05 a.m. window here. All right. So this sold back down, produced a wick, and it tried to go lower here, produced the same type of wick, but then it traded back up. So these wicks down here tell me that I think that we have exhausted those sellers and now we are at a support. So if I'm trying to trade price action, when I see these wicks around these support and resistance areas, this helps me in my decision to take entry or exit a trade. Okay, so there's nothing wrong with trying to identify a parallel channel like we've done here and saying, okay, this stock pushed up out of the open. Let's say you were not in that stock. Okay, we're going to be patient. We're going to wait this out. The chart starts to show a topping formation. We trade all the way up to resistance. The stock puts on a reversal candle up here. Okay, then maybe what we should do is go short back down to the bottom end of the range. Well, the stock starts coming back in. Our trade looks like it's working. But then when it gets down here to the 71 level, things start to change. Instead of continuing to sell off, it looks like it's trying to bounce. It doesn't have that same selling pressure that we had here. Maybe things are starting to change there. Cover this short up, or if you want, even reverse into that. Now, reversing is tough. You really, really have to be on. So I would say, especially if you're newer, I wouldn't really worry about reversing a trade. Instead, I would work on practicing whether or not you can capture these moves. Once you're able to capture a lot of these moves consecutively, then and only then maybe should you look into reversing your position. Basically, you have to be right. I mean, if this stock traded up and you went short there and then it kept going up, that would be painful, and we want to avoid that. The whole point of doing this is that we're trying to have the chart give us information and make us feel confident about our trade. Okay, so we talked already about potential or behavior of price around support and resistance. We've talked about wicks. You can see how the wicks, generally speaking, produce a pretty clear image that, hey, something might be reversing. In fact, if we fast forward to almost where we're at right now, we have a very similar type of formation. We have this candle up near the top end of the range, just shy of the resistance area, giving us that long wick to the upside. And in fact, the very next candle also has one of those wicks to the upside. So maybe this then was your trigger to trade this short. Now we are coming back in, and as you can see, things don't just move in a straight line. There's going to be some back and forth. So these levels should help you kind of plan out your trade. But right now, to my eye here, it sure looks like a firm wants to trade down more so than it wants to trade up. Now, the last thing in our strategy that I want you to pay attention to is the volume. Now, I don't know, you might have different platforms and different brokers that might display this stuff differently, but what you're looking at here on my screen in Benzinga Pro here or in these trading view charts, we actually have the volume sticks overlaid on the chart. Again, this is not like a right way to do it or a wrong way to do it. Any way that you can keep track of the volume is going to be paramount. Whether you have it on your chart or whether you have it separate, that doesn't really matter. As long as you can see it and track it, that's really the key here. And one of the things that you'll notice is that the outsized moves, meaning the candles that really seem to put in more movement in whatever direction it is, both up and down, doesn't matter. The candles that are bigger, the candles that are really moving, are associated with higher periods of volume. And this should be true even on the daily chart. So if we come back here to the daily chart, you could see if I look back in the past, when a firm right here back in August of 2024 broke out of that range and gapped up, well, it did so on really high volume. And that volume kind of dried up again. You'll notice that it turned to selling volume. That selling volume continued to compress. And then all of a sudden, when that selling volume turned around to buying volume, even though it increased just a little bit, look what happened to the price. The sellers were exhausted. They turned into buyers, and that price went up too. So we always want to watch the volume. This is going to be paramount. Every day trading strategy that I do pays attention to the volume in one way or another. Now, if we zoom into an intraday chart, you can see the very similar type of behavior here, right? Right out of the open. First of all, right when the market opens, we should expect more volume. The same is true around the close. There's going to be more volume around the open and close than there is in the middle of the day. This is just normal. This is just normal market behavior. There's nothing really to take away from that. But what we can do is we can watch this volume and see if it changes relative to previous sticks and then trade it. So again, in our hypothetical example here, we watched the price rip out of the gate. We have no position, right? Because we didn't know ahead of time if this company was going to beat or miss earnings. Earnings is a binary event. We weren't in that, but we are after the earnings report comes out, now that the new day is about to start, we're watching the stock now because they have this piece of news. Well, we're watching the stock. The volume is really heavy out of the open here, and the stock trades up to a high here of 76.86. Well, in this period of moving up, all of these green candles that move up, look what happens to the volume. It's a ton of buying volume, right? All these candles are green down here, but notice how it is ever so slightly kind of compressing, okay? Well, it continues to compress. Then we get a reversal candle around our resistance area. So now we've incorporated all three things that we've talked about. We're monitoring the volume. We noticed it's starting to dry up a little bit or compress a little bit. We notice that this happens to be happening around a resistance level that we've identified. That's number two. And on top of that, number three, we have a candle here with a considerable wick. Those three things are playing into this trading price action strategy. So this right here, signaling a near-term intraday top. As this starts to move down, you'll notice that the volume, although it's not expanding, it's actually morphing from buying to selling volume. What happens when there are more sellers than buyers? You guessed it, the price goes down, and that's exactly what we're seeing. It continues to come in here. It culminates with these two red candles, and then look what happens. The sellers, they turn to buyers. Okay, the candles become green. Although the volume candles are getting smaller here, remember, they're not selling candles anymore. Look what happens to the price. As that volume dries up, it kind of comes in a little bit, and look at what we have here. 1, 2, 3, 4, 5, 6 candles in a row that all have wicks to the downside that almost touch this support area. What does that mean from what we just learned? A possible reversal spot. And look what happens. The volume starts to creep up, turns from selling volume to buying volume, and look what happens to the price. It continues to trade up too. So again, this strategy here, extremely simple. It uses three things that we take a look at every single day. Support and resistance lines. You can do that with indicators, studies like moving averages, or just simply where the price changes, right? Where does it stop going up and then start going down, or vice versa. We also take a look at wicks, right? We want to see where that candle gets extended for the purpose of identifying a reversal. When we have a wick in either direction, we are possibly setting up for a reversal here. And if we get multiple candles with the same type of wick, that increases our chance. And then finally, we're actually looking at the volume to help us determine, hey, is this move going to keep going? Is this a head fake? How are these things changing here? So behavior of the price around support and resistance levels, wicks, both up and down, and volume. Those are the three things that you want to look at when day trading price action. I hope this video was helpful, and I hope you'll join us the next time for some of these tutorial videos. I'm Ryan for Benzinga Pro. Stay green, stay safe, and we'll see you next time.